You can make a lot of money from this concept, right? Because you can have an accuracy rate of what move is next. You can have a 70 to 84% accuracy rate. Now, remember, if it's a 70% accuracy rate, guys, that means that out of every 10 times you do it, you should at least have roughly seven of the 10 work. If it's an 84% accuracy rate, you're really sometimes 8 times, sometimes 9 times out of 10. That's incredible. You can become fabulously wealthy in the markets with odds like that. There has to be a power move, a bull move. And what you see here is just basically a graphical indication of what a bull move is. It's just a strong, powerful surge to the upside. In reality, this strong surge to the upside can be in the form of one solid bar move, just like you see here, or in reality, you could get a multiple bar run to the upside that represents the same thing. Both of these scenarios are bull moves. Both of them are powerful surges. Both of them count as practically the same thing. It's easier to identify the one bar solid, strong surge to the upside. It's a little more complex to identify the multiple bar surge, but I'll give you a key. There's little to no interruption in the multiple bar run to the upside. If you get an interruption, it's brief, little to no interruption to the upside. If you're getting the multiple bar version of the strong move to the upside, and the bars that make up the move are fairly solid. So your bars are fairly solid. You'll get bars that start here and in there. That's a relatively solid bar. So the bars are fairly solid. You don't get this in the power move where there's a big giant tail on the bar and that bar is not considered to be solid. All right. So very easy to recognize the surge that we need, the power move we need if it's one bar. Little more complex if it's multiple bars, but just when we're considering the multiple bar surge, we want most of the bars to be solid in nature. They can have little wicks on each side of them, but we want the vast majority of the bars that make up the multiple bar version to be relatively solid. And if there are interrupts or pauses, those interrupts or pauses are very short-lived. But for the most part, both of these scenarios are equal. I want all of you, whenever you get a surge, I want you to break the surge up at least mentally into thirds. We're going to always think in thirds. Power surge to the upside, that power surge is divided into thirds. There's a top third, there's a middle third, there's a bottom third. Even if you get the multiple bar run that represents the surge, you're going to think in thirds. Top third, middle third, bottom third. Why is this important? What we need in order to have flag, we need, when the stock is ready to rest, when the stock is ready to pause, if that pause happens to occur in the top third of the surge's range, of the power moves range, if the consolidation period stays trapped in the upper third of that move, you've got something like an 84% chance that, boom, this happens. Now remember, this power move, traders, can be multiple bars as well. Boom, 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 and boom. In this scenario that I've drawn here, you are in the top 1/3 of that multi-bar run-up. Very important to understand. Where do you strike with this? My traders are taught to strike on what we call the clearing event. And the clearing event would be a surge or so that rocks above the last 5 bars. So any move that takes out the last 5 bars this way, you don't have to go all the way here. So let's say this sideways pattern could be made out of 11 bars, but it's the last 5 bars that matters the most. So it's not the whole thing, it's the last 5 bars. If you clear the last 5 bars, boom, you're buying the break above the last 5 bars of the pause, not the last 10 bars, not the whole pause. That whole pause could be 12 bars. That whole pause could be 8 bars. That whole pause could be made up of 16 bars, but it's the last 5 bars that matter. And whatever bar clears the last 5 bars, boom, that's your buy bar. What happens, traders? What happens if you don't get the pause in the top 1/3? What if it drifts downward? A stock must rest after a power move. If it doesn't rest, it's going to run out of gas, and continuation of that power has low odds. To continue this way, it can't just keep going without resting. The rest happens in one of two ways. We talked about one way your stock can rest. It rests sideways. After a certain period of rest, as long as that rest is in the top portion, boom, that is an 84% likely result. All right, we've talked about that. But there's another way a stock can rest. It can rest this way. You see that? So I want you to think about this for a moment. Here's your bull run. Your rest is going to come this way or that way. Now, both accomplish the same thing. They allow the bulls to rest, take a pit stop, catch their breath, and move on. Boom. Boom. Now, if you look at the black resting periods, aren't they really the same thing, just at a different angle? If your stock rests sideways, it needs to stay in the top 1/3, or all bets are off for an upside break. If it starts resting in a diagonal way, sideways, then it must maintain the top 50%. Otherwise, all bets are off for a nice continued bullish run to the upside. The new high here, it's not quite as high as the 84% of the sideways rest. So this one is more in the lines of closer to 70%, maybe even a little bit less, like 68, 69, but let's round up to 70. So there's a 70% chance, which again, remember I told you I had an algorithm that made $1 zillion at a 37% accuracy rate. This is a 70% accuracy rate, still very high, not as high as the sideways drift in that top third. If the stock drops here, stock runs up, then drops here. To make a new high, my stock now has to travel, 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 and now make the new high. By the time it's making the new high, it has already expended energy. It's already put effort in. And by the time the new high happens, a portion of its energy has been spent. However, in this scenario, when you are making, boom, this new high, It's just beginning. You see the difference? So this new high is fresher than this new high because the run started from here versus in this case, the run is starting from here and is still fresh at the breakout point. Not so much energy has been expended to get to the breakout point. And so this follow through rate is higher than this follow through rate because of that reason. The way we play these two things are very different. The way my traders play these things are very different. In this scenario, in the sideways scenario, you are buying the new high break. In this scenario, boom! Remember, 5 bars. That's your magic number. If you're clearing 5 bars, boom! You're jumping into the bar that's wiping out the last 5 bars. But in this scenario, when you're drifting downward, you're not buying here. Oh no. You're buying there. You're buying the green bar that clears 1 or 2 bars before it. 5 bars here, 1 to 2 bars there. Boom. 1 to 2. 2 if the bars are small, 1 if the bar is normal. So if you got a normal red and boom, green takes out, we call that a color change. Green takes out the red, boom, boom, boom. But what's the key? The key is this must happen in the top 50%, not the bottom 50%. As long as this change, as long as that green surge that is now eliminating a red bar is happening in the top 50%, now you've got decent odds of getting to that new high. This is not the drift sideways, which we know has to stay in the top third. This is not the drift downward, which we know has to stay in the top 50%, right? This kind of slows down the momentum, but slows down in a drifting upward way. So now we've got all 3 drifts or 3 pauses covered: the sideways pause, the pause that drifts downward a bit, and then the pause that drifts upward a bit. This still expends some energy. This expends no energy. This expends some, but very little. And this is still expending energy a little bit. So what potentially can happen here is this. This can happen and still be bullish if you don't break back below the top third. So if this drops like this, that's still okay. But if the drop breaks back through the top third of the initial power move, it's over. Now rallies will likely fail. And you got to be careful about trying to buy the move back up here, because that's your likely scenario. We've covered 3 scenarios. Scenario 1, the sideways drift that maintains the top third, the downward drift that maintains the top half, the upward drift that also maintains the top third. This must maintain the top third to stay healthy. If we break, it's over. If we break, it's over. All right, I want to show you the other side of it, right? I want to show you the other side of it. So take a look. Let's take a look at the bear game. And we can, since you know the fundamentals of the bull side, we can pretty much breeze through the bear side very quickly. Bear move. Remember, this bear move, traders, can be a multiple bar move or a single solid move. So you can have this, which basically is the same thing as this. Like it's just broken up in pieces versus one giant surge. Both really mean the same thing. Now, we want to divide all surges into thirds. If we get a resting period at the bottom third of the negative surge, you're going lower 84% of the time. That's lower. All we're doing is taking that, what we've covered, and just applying it to the downside. 84%. I'm going to type this in so that you get the point. 84% likelihood. I used to short these. I used to go into the shorts. I used to short in the base, knowing that there's an 84% chance of a drop. I wouldn't even wait for the drop. I wouldn't even wait for it to clear 5 bars. I would get in the short in the base. And yes, there were times I would get knocked out of the base. I'm shorting here, and I would get knocked out of it here on a blip or something like that. But oftentimes, I'd get extra gains by going in the base. All right, I'm not telling you to do that, but that's what I used to do. I used to position myself in that base in anticipation of the drop to the downside. Same thing on the upside, but I did it more on the short side than I did on the long side. I'm just a natural shorter. I've always been, and I think that comes from my market making years. Here is the drift upward. As long as that drift upward doesn't greatly violate the 50% level of the surge, there's a high likelihood that you're going to have another drop to the downside. So all this move really is a continuation of what started there, but it just needed a resting period. And my traders are looking to get into this here, not at the new low. They're looking to get into the color change there. The people who get there usually get whipped out. We don't do it here, we do it there. We have the other scenario where this actually increases the odds that this happens. Why? Because your red is getting no rest. Do you understand? What will continue this is a rest, this way or that way. What will probably end it is no rest. You follow what I'm saying? I hope that makes sense. All right. So if we look at it like this is rest. This is rest. This is no rest. So it's just the downward move gets totally spent and the bulls can now take over. I want to show you this version of drop and no rest. And then boom, that. Remember, it can be multiple bars. Drift, no rest, boom. Remember this one? Boom, boom, stay in the top 50%, and boom. Remember that? Or remember, this can be like this, boom, stay in the top 50%, and boom. So it can be 1 bar surge, or it can be a multiple bar run, as long as we stay in the top 50%. So take a look. Rest, 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 rest. Stay in the top 50%. Boom! Wait a minute. Let's take a look at this one. Let's take a look at surge. Boom! Stay in the top third. Remember that one? Top third. Boom! Let's do the bearish one. Down. Boom! Top third, middle third, bottom third, right? Boom! All right, now I think we can see this a little bit better. Or you might see this more like this, guys. Drop, rest, stay in the bottom 50%, and boom. So you might see that like drop, stay in the bottom 50%, top 50, bottom 50, boom. All right. Now let's look at the bullish one again. Let's look at this. Stay in the top third. Boom. Look. Top third. Boom. Do a nice little pullback. Doesn't break the top third, right? So here is your multi-bar drop. Now this could be one giant surge down, but it's not. It's a it's not one surge down. It's multi-bar drop down. And the bars are largely full, right? Remember that? So now you drop, boom. You stay in the bottom third, right? Top third, middle third, bottom third, and boom, 84% of the time. You can make a lot of money from this concept, right? Because you can have an accuracy rate of what move is next. You can have a 70 to 84% accuracy rate. Now, remember, if it's a 70% accuracy rate, guys, that means that out of every 10 times you do it, you should at least have roughly seven of the 10 work. If it's an 84% accuracy rate, you're really sometimes 8 times, sometimes 9 times out of 10. That's incredible. You can become fabulously wealthy in the markets with odds like that. This not only tells us how to predict what is likely the next move, it also helps us predict what is likely the beginning of a turn. So remember I told you that if you get a drop like this and you stay and we start to move up. Now the move up one, right? We're using the 50% mark, right? Not the third. That's the sideways one. So the move up one, we have to split the drop in half. If we surpass the half, and specifically 66%, I won't go into the details of that, but if we pass 66% up, certainly past 50, but if we get as high as 66%, now the next drop is buyable. You see, in this scenario, guys, you stay in the bottom 50, that's still likely. But if you get high enough, this drop should be shallower than the last one, and that's a turning point, typically. All right? And so because this drop here we're dealing with is still in the bottom third, we have to assume that there's likely to be more weakness. What's the exception to this? What's the exception to that 1/3 rule? I'm going to show you there is an exception. You need to know that. Let's say you get this drop, boom, and here's your 1/3. Okay. Now, 84%, you should be going this way, right? Unless this keeps going. You can go so far away from this that this negativity gets canceled out. Drop. Now, if it breaks there, you're good. But if it keeps going, Boom. So the further you get away from the initial trouble, the greater the odds start shifting back to the other side. So here is 84%, but you get less and less. You see what I'm saying? Less. As you get further away, that 84% starts melting, and the opposite direction becomes more likely. Stop. And again, guys, this works in any time frame. I'm switching now to the hourly, and you can basically see, look at this drop, and drop. You're still kind of in this bottom part. The time frame doesn't matter, nor does really the item. Now, you see how you got drop here? Drop. Now, you don't get this, you get this, right? But now you have to cut that in half, and you go way past the half. So now the pullback is likely to be short-lived. It's very different. Drop, you go past the 50% mark, that pullback is likely to do that now. And that's exactly what you had in Apple today. Now, this is the miniature version of what I'm teaching you right now. You see that little green pause there? If we go to a smaller time frame, like let's see if we can do even like a 1 minute there, what you'll see this morning is you'll see it clearly, the drop, the drop, the pause, the drop. So in each one of these drops, all right, we can start the drop from here, right? Drop. The pause was very mild. Did not bounce way up there or anything like that. It stayed in the bottom third, right? And drop. Now your pause stays in the bottom third of the next drop. Now look at this drop, but your rally gets past the halfway mark, which means that now this next pullback should go over and over and over again. Guys, what I'm teaching you here today is elementary. It's basic in the technical world of trading. But the nuances I've gone into make this come alive way more than just knowing the definition of these things. All right? Knowing specifics like the percentage that changes something, the further it gets away, the lower the odds drop. The clearing of 5 bars, not the whole base. All of those nuances make this extraordinarily valuable.